What if a single silent tap on your smartphone during a brief lunch break could instantly vaporize your entire 30-day salary? This devastating financial reality is quietly striking thousands of modern retail accounts right now, operating entirely within a mere 90 minutes. Most ambitious individuals blame sudden, unexpected market shifts or terrible personal luck for these catastrophic, lightning-fast portfolio drawdowns. Yet, the real culprit is not your bad timing, but a highly sophisticated, invisible system specifically engineered to exploit your mind. Before we reveal the shocking mathematical outcome of this specific afternoon trade, we must examine the hidden architecture of modern mobile applications. Modern digital brokerages have fundamentally altered their interface systems to deliberately accelerate your transaction velocity without your conscious awareness. By transforming complex financial derivatives into low-friction digital interactions, they effectively bypass your standard cognitive risk filters. This masterfully designed psychological cycle leaves your hard-earned capital completely defenseless long before you can apply traditional risk mitigation protocols. To truly understand this wealth-draining mechanism, we must analyze the stark mathematical asymmetry embedded within hyper-short-term derivative vehicles. The human brain possesses a natural behavioral lottery effect, consistently overestimating low-probability outlier outcomes when stimulated by constant micro-rewards. Fintech platforms capitalize on this bias by integrating vibrant celebratory visuals, bright color alerts, and seamless swipe-to-trade mechanics. Think of this setup as the digital casino pipeline, a highly optimized process where standard retail capital is systematically funneled. This streamlined pipeline strips away traditional structural protections like traditional settlement buffers, accelerating your exposure to extreme volatility. Consequently, your entire balance remains completely vulnerable to automated liquidation protocols that execute without human intervention. When you trade under these conditions, you are no longer investing. You are participating in a game designed for your depletion. The behavioral finance trading mechanics are meticulously tuned to keep you trapped in a high-frequency cycle. Neutralizing this commercial exploitation requires a profound upgrade to your personal financial intelligence engine, rather than simple willpower. By recognizing these structural traps, you can actively protect your long-term capital autonomy against aggressive gamified platforms. Understanding the core math behind these short-term vehicles allows you to dismantle the illusion of easy market wealth. The difference between rapid capital destruction and sustainable wealth accumulation comes down to controlling your immediate environment. To permanently safeguard your assets from these predatory interface structures, you must consistently upgrade your strategic mindset. Hit the subscribe button right now to equip your financial intelligence engine with the ultimate armor against behavioral exploitation. By joining our global community, you will master the precise analytical insights needed to systematically neutralize these capitalistic traps. Now, let us observe exactly what happens when these exact psychological forces play out over an extended period. We are about to contrast two distinct consumer archetypes to see the true long-term impact of gamified trading. Let us analyze Profile A, a modern retail participant who executes rapid zero-DTE options trades on highly gamified mobile platforms. Over a 120-day period, Profile A's trading trajectory reveals a systematic depletion of capital caused by high transaction frequency. Because zero-DTE contracts decay to zero value within hours, Profile A repeatedly triggers automated liquidation protocols and catastrophic margin calls. In stark contrast, Profile B operates under a structured, rules-based equity accumulation plan utilizing long-term index funds. By removing short-term market noise, Profile B consistently captures steady growth while completely avoiding the platform's high-frequency transaction traps. While Profile A's speculative behavior leads to complete account depletion, Profile B's systematic patience builds a predictable foundation. The mathematical contrast between these two distinct consumer archetypes reveals that market success depends heavily on system friction. Profile A's brain was constantly flooded with behavioral dopamine cues, blinding their rational risk assessment circuitry to probability distributions. By contrast, Profile B's low transaction frequency kept their cognitive resources completely focused on long-term compound growth. This comparative tracking proves that surviving modern fintech environments requires introducing deliberate, physical obstacles into your trading process. If you do not intentionally build digital walls to protect your capital, the gamified platform will systematically extract it. The real tragedy is that millions of retail traders believe they are losing to the market, when they are actually losing to interface design. Recognizing this architectural manipulation is the very first step toward reclaiming your psychological and financial independence. To neutralize this systematic depletion, we must implement a highly practical brain hack called digital architecture friction. First, remove all high-frequency trading applications entirely from your primary mobile environment to break the immediate accessibility loop. Second, permanently disable every real-time push notification related to short-term market movements or shifting trading volumes. Third, introduce mandatory multi-step approval delays for any derivative contract execution to force your rational brain to engage. Before the next market opening bell, access your primary brokerage account settings and permanently disable all gamified interface celebrations. Establish a strict, hard-coded daily maximum drawdown limit on your account to guarantee absolute algorithmic protection over your assets. These scientific environmental control skills systematically prevent your brain's risk assessment circuitry from being bypassed by low-friction designs. By deliberately slowing down your transaction velocity, you successfully deactivate the behavioral feedback loops engineered by modern brokerages. This simple transition from immediate digital reaction to deliberate delayed action will permanently alter your long-term wealth trajectory. True financial autonomy is not achieved by predicting market movements, but by mastering the design of your immediate environment. Take absolute control over your digital environment tonight and watch your trading portfolio transform into a fortress of capital. Secure your financial future by applying these behavioral shield protocols, and subscribe now to join our global analytic elite.